Today, we want to share some insights about the Nifty Metal Index, which has been one of the top performers over the past year. Now, let's break down what's happening in the metal sector and how it's looking right now in 2024. To start off, the Nifty Metal Index tracks the performance of the metals sector, including both ferrous as well as non-ferrous metals, as well as the precious metals. Now, this sector is crucial for the Indian economy, supporting industries like construction, automotive, aerospace, and many others. Now, over the last year, metals stocks really thrived, and if you see the image on the screen right now, Nifty Metal has surged about 22% so far in the calendar year 2024, and if you see the past 1 year performance, it has witnessed an impressive rally of around 45%. Now, to just put it into context, India is the world's second largest producer of crude steel and the fourth largest producer of iron ore. So you can imagine how important this sector is to our own country. Now, you might be wondering why we are still talking about the steel sector. Yesterday, China's central bank, which is the People's Bank of China, announced a cut in the borrowing costs and an injection of more liquidity within the economy. Furthermore, the cash reserve ratio, which is a percentage of cash that the banks are required to hold as reserves, will also be cut by 50 basis points in the near future. Now, this was done to stimulate and revive the Chinese economy, which has witnessed subdued growth ever since the pandemic, along with real estate sector debt, youth unemployment, and faltering demand. Now, the move by the Central Bank of China to stimulate growth has sent positivity throughout the global market and has had a ripple effect on the Indian metal markets as well. Now, in context, China is the world's largest producer and consumer of steel, accounting for more than half of the world's output as well. So why are the prices of the Indian metal stocks surging, you may ask here? Firstly, as we discussed, the Chinese monetary stimulus has had a ripple effect on the global markets, including the Indian metal market as well, as it is expected to inject around $1 trillion in long-term liquidity. It will further boost demand for commodities, and if the demand for commodities rises, so will the prices of metals. Secondly, the Indian government has proposed to increase the import duties on steel from the existing 7.5% to anywhere between 10 to 12% to combat anti-dumping from China. Now, this is with the aim to protect local manufacturers in India by creating a more level playing field. Now, this import duty hike is expected to have significant implications for the steel domestic producers and are likely to benefit from reduced competition from subsidized imports. Lastly, the Indian government's focus on infrastructure development has had a positive impact on steel demand, which is expected to remain high for the upcoming years. Now, this positive outlook provides a significant opportunity for Indian steel producers. Now, all in all, with continued investment in the infrastructure and a possible stabilization of the global economy, the outlook for the metal industry looks extremely bright ahead. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.